Hello, everybody, and welcome to the Plus3 Futures and Commodities show. It is Saturday, the 19th of March, one day from spring. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
Doing pretty good, Ben. Doing pretty good.
You ready for spring?
Boy, am I ready for spring. I'm ready. I'm ready.
I'll tell you what.
Although, it's summer here. We're going from rainy season,
That's true. That is true.
I'm in Costa Rica, so we're going from rainy to summer. So it's kind of a spring, actually.
Right. I'll tell you, the Bulls sure sprung one on the Bears this past week.
Yep.
That was a classic bear market short squeeze from hell if you were short.
Mm-hmm.
And I was short, I have to admit it. I was short, so I got caught in the squeeze. But again, if you've been through this road, this is not your first rodeo, you know that this is possible. So you don't, unload your whole clip on at the lows and put yourself in a position where this could happen. You size your positions right, and you enter at resistance, and then you let the dice roll. And that's kind of how you have to look at it, because these things happen in bear markets where you can get these violent rallies. And if you go back and look at your statistics, some of the strongest 1 day, 2 day, 3 day rallies happen in bear markets. So anyway, there's a lot of interesting stuff going on that we're going to cover today. And let's start with Bitcoin. Interestingly enough, and you and I were discussing this before the show here, it's not kicking up like you would anticipate in this environment. Kind of, you had everything going for it with, monetary policy uncertainty, inflation, sovereign risks with governments doing stuff with currencies and foreign exchange rates and sanctions. And yet here we are stuck in the triangle. And most importantly, stuck below this full square resistance
that we've been talking about for about 2 months.
Exactly. And that while it may not seem significant, is really important, because the messages it's sending, to me at least, is that there's not a lot of strength here. There's not a lot of buying. There's not a lot of demand, that we're just kind of marking time, waiting for the next thing. And speaking of time, I was wondering if we're just going to keep sort of winding up into this early April date, which would mark off, another roughly 69, 70 calendar days that we've sort of seen it do cycles, high to low over here.
Mm-hmm.
I don't know, where are you on Bitcoin these days?
Well, I think it's doing classic sort of fourth wave, and it's squeezing down. We're having lower highs and higher lows getting squeezed. So it's to me, it looks like we didn't quite finish the downside, but we might coil going into your 69, 70-day cycle, which is coming right up by the end of the month, I think. Right?
Yeah, it's like April 3rd, April 4th.
So we might wind into that and then pick a direction and finish it off. So let's see.
Yeah, I mean, as a proxy for risk, I would have thought with the the crazy strength we saw in the NQs and in ES, that we would have saw more here, but we really didn't get it. We're just sort of banging our head up against that ceiling and not making much headway. So we'll see what happens with Bitcoin. Right now, let's throw it over to you and review the big five and see what's going on there. Also, before I forget, I want to make sure to remind everybody, please, if you like the videos, click on the bell, hit the likes, share the videos, please. That helps us get ideas of the traffic and everything that's going on YouTube. So thanks for doing that.
And leave some comment. And we had a comment last week asking us to do maybe different sectors like uranium or certain select sectors. So we'll start doing that soon. We'll start doing stocks in the news.
Mm-hmm.
So I think that'll be a nice thing to do.
We'll have a radioactive special for uranium.
For the uranium stocks. Yeah. let's do that. I think it's a good time to do it because
Yeah.
okay. Looking at the E-mini, we left you with two levels last week. I said the 42.75 was a key balance point to watch, meaning that it's going to be weak below that level and it's going to be stronger if we get above it. And that was sort of the balance point we were watching, with 44.5 being the major resistance point above that. So sure enough, once we broke through the 42.75, next stop was promptly 44.5, and that was Friday's close.
Mm-hmm.
And we had that box drawn out last week. So that's what happened. So what's the deal next week? It's,
Right, we're right back into the soup, huh?
yeah, we're right it back into that resistance level, and this thing's never done. So let's see. Looking at the pattern, we really, this 44.50, although that was the case for last week, I'm going to have to adjust that for next week because of the pattern. I'm looking at a lot of market structure and whatnot. So, and when I talk about this chart, I'm trying to sort of summarize and combine all the other work into one spot, just to keep it simple. And I think 44.90 is really the key level to watch for the upper end.
Mm-hmm.
And I'm looking at that as resistance. And the 44.78 is work that. I mean, they're fairly close on a daily chart. It's
Right,
not that far apart. But basically, those are the two key resistance levels we have. And intraday, there's still, 10 points apart, 12 points apart, but that's really the key level to watch. And 44.20 to the downside. So I think if we, let me mark it out so it's easy to see. All right, now we can talk about it. So for next week, I'm looking for resistance, between 44.78 and 44.90. Could go 95, but it's right under 45. It's in that area, and it's marked, and these are the numbers here. Now, if we can manage to hold above 44.78, 75, 78 level that we have here, if we can manage to do that, I'm expecting it to probably be on firm ground and maybe another on a run up, take out this 44.90. And if we do that, then we're probably going to go higher and challenge the highest, up in the
4,600 area.
Yeah, 46 at least, right? And maybe the whole thing will change, and we're probably going to go up and do another test the highs.
Mm-hmm.
And the sign for us doing that would be, first thing would be that we're holding 44.20. You got to watch that. Second would be that we, really take out 44.80, 44.90 level, and we kind of get above that and stay above it. But to get above and stay above, the early warning sign would be this 44.20. If we kind of, we got above it now, if we can kind of stay above that Monday, more or less, then I think we have to really keep an eye on this 44.80, 90 level to be taken out. And if it does, be open to the fact that we could rally a lot more. Okay, that's the upside. The other side of that, flip side of that coin is, this 78 and 90 being key resistance. If we get under 44.20 and we kind of try to, make lower highs and can't really get through that and hold that level, then I think we have a hell of a chance to go back and test 42.75 next week. So that's the thing to watch for next week. And the stuff about 44.90, 44.80, and 44.20 being held, all that business is probably Monday, Tuesday business. So after that, either we're going to be above that level and running, or we're going to be below that level and moving towards 42.75. That's how I'm kind of mapping this out.
Mm-hmm.
And looking at the weekly, this really helped a lot in trying to find the boundaries. We drew these the squares out to measure the movements, and we talked about this bottom of this top square this line being a support zone, right? Not exactly a line, but it's in that ballpark. And you can see, 3-4 weeks, we kind of held that, right? We came back down to challenge it and held it up along those lines.
Barry, remind people how you derived the size of the box, because I think that's important.
Well, Ben, we can't talk about secrets like that. But actually, it's really super, it's dumb simple, but it's really looking at market structure. It's really, you can go back, and you can do this to any market. Just go back and measure out a prior leg or two. And in this case, I measured out the leg over here in 2018. And if you double that, then we got the drop in 2020. And if you go up and set it up on the high that we had this year, you can see, I would expect the lows to be around the same area, right?
Mm-hmm.
And that's where we got that. Now, if we somehow got under that, then we have the second box to finish up. So there we had two targets long term. And not saying, we might not get there later, but for now, it helped us sort of figure out where that low end was without, with some good level of confidence. So that's what that was. That being said, we only had one counter trend on this down, the downdraft we've had. And so here's the first down move, 1 bar counter trend, down again, 1 bar counter trend, down again. But of course, it's a higher low this time. And here's our counter trend. So of course, it's an outside reversal kind of a bar.
Mm-hmm.
A lot of power in that. So let's see if this is a meaningful one or if it's going to sort of fizzle out. And we'll know that by watching these levels on a shorter term basis. So here it's the daily. I also wanted to point to this other chart that I posted on Twitter. So we've been following this ever since the first low came in. And these equilibrium lines have been really good. It trapped the initial counter trend. And then once it broke down, it sort of held the middle part. And then last week, and of course the lows held. These are the lows that we talked about on the weekly and the daily.
Mm-hmm.
And last week, we broke out of the middle, and you can see it came back and retested the line before taking off. Of course, it was early in the morning, but it did it, right?
Mm-hmm.
And that's what we mean by, breaking above a level and holding. So here we broke above the level, we held above it, and then we started moving. So it's basically a little hook, like an entry hook pattern, ABC pattern. And so as soon as that was done, the next stop was basically the next line, the XB line up here. This is the main line. And you can see there's a lot of activity here in the past. So here we are. And just based on the lower time frame, 4 hours. So we're right there, right in max resistance. Of course, we could push a little bit more. I think that's, we can expect that. But I'm watching these levels to sort of fail if there's no juice to continue higher. Mm-hmm. So at this point, we really need to clear, the 4470, 4480, kind of getting up into that range we talked about in the daily. But this is on the 4 hours. So these levels aren't as strong, but they give a good indication of where the balance, when the balance shifts. So here, clearly, it's a really important line to watch. And we'll be updating that on Twitter if you guys follow.
Yeah, that's a great chart.
Mm-hmm. Yeah, it's been super helpful. So that's it for the E-mini, just super simple. Watch these numbers and I'll update these on the spreadsheet so you guys have that for reference. Moving on to bonds. We've been bearish on the bonds. We called out these resistance up here at close to 160. And promptly we turned around and called out for weaker conditions below 158, which was right there. And we got that. And now, sort of cruising for a bruising, looks like. Mm-hmm. See what happens. Again, we're always watching these levels as the market's sort of unfolding. So this 153.20 is really the level to either get above or not. So here's a classic case of where the market got under 158.20 1, 2, 3, 4 days, 1 day counter trend, inside day. So we're stuck below that. That's what we call, getting under and getting stuck below, right? So my call for next week, as long as we're below this 158.20 or 19, it's on weak grounds and could easily test the 148 level, which would finish this 72-degree move, and also flush out this last low, which didn't look that convincing to me. Let's see what happens there. Moving on to the weekly bonds. Well, it's a pretty picture. We had this trend line going for a while, months and months. That last counter trend ran right up into the trend line, kissed it from below and basically just folded
Said
over.
goodbye.
Said goodbye. And well, again, same thing. This is not in any kind of a strong position. We're still bearish, and basis weekly, this 140, the 140 level would be 90 down, and that wouldn't be out of the question. So I'd be watching that long term. But for now, this main trend line is pointing down. So, and we're below key levels. So it's just a matter of time before it trades lower, as far as I can tell from looking at the squares.
Mm-hmm.
Anything you want to add to the bonds there?
I'm going to quickly review bonds with the weekly chart, with the cycles that we have and the circles. So, but I concur. The bonds look weak, and when we may see an acceleration to the downside this week.
Well, moving on to gold. Nope, crude.
Black gold.
Black gold. Let's see. Where did we leave it off last week? See the box we drew up. Let me get the square out of the way.
And 97 was one of the key levels on the downside.
Yeah. So we talked about, if we can hold about 97, markets are in a strong position, and that we could mount another rally. And but clearly we broke below that. But we did get above, we got to 102. For next week, because the fact that it didn't hold above 102 and really not even 97, I think we're probably going to consolidate here for a little bit and get on either side of 97. Either we're going to hold above and sort of get some traction and make another move higher, or if we start to get weak below 102 and start scratching 97 to the downside, starts making lower highs, then I think, we're probably going to go test 91, at least to take out this last week's low. So it's a bit of a mix, I think, as long as these levels are not held one way or the other. So unless Monday we clear 102 and, and we hold that level on any kind of a pullback. So unless we can get above this and stay above, or we get below 97 and stay below, I think between 97, 102, this area is probably going to just chop and consolidate for the next week.
That crude chart looks like a lot of the commodities, the grains, gold, silver, crude, they all have that similar pattern. And, maybe part of what we picked up last week that, hey, these things are starting to consolidate. They're going to, either burn time and chop or pull back. And I think we're starting to see that unfold.
Right. And, we got this 135 from running up 2 squares off this beginning of this leg here.
Mm-hmm.
But if you go up to the high that we did make, the counter trend came exactly 72 degrees down.
Mm-hmm.
So that's something to watch, right? Keep in mind, okay, we did come 72. That was, that completed that leg. So that's why I said if we can hold above this 97, and consolidate above that, we could probably run back up again, because that, 72 is fairly, it's a good level. And if we can't hold above 97, we start to, play with on the lower side of that, then we're probably going to slip under this and slip below 91 and maybe, trade a little lower. But it looks like we should hold above that and probably consolidate next week. And we'll see how it ends up. Go and take a look at the weekly. Weekly did the square held fairly well. We had 90 degrees up, and for the market to be strong, we really wanted to hold above that full square on any kind of counter trend. So we had basically a 1 bar counter trend. We more or less held above it, right? Yeah, it peaked a little bit, but hey, these aren't normal times. So I think that little bit of slippage is okay.
No question, especially how volatile that market's been.
Exactly. So I think that's where we get that 95. We'll watch that, and that's why it's important. Also, basis weekly. We want to make sure that if it can hold above that, I think there's confidence that we can probably mount another rally off of these levels. So, move it on to gold. Speaking of corrections, right?
Mm-hmm. So I say they all have that similar look. See the spike and the first pullback that we've got.
It's almost like they overdid it, and
always do.
Mm-hmm. So last week we left it off with this 1940 being a key level, and we boxed up this zone and called it out to be, market to be stronger on firm grounds above that and get weaker under that. So clearly we broke under that right away last week. So it's really it's a little bit softer. I wouldn't say it's weak. Weak would be if it gets under 1887. I think that's a key level to watch for the overall balance, right? Because we have these old highs, really important highs, right around that level. So got to watch that closely. And onto the upside, if we really can't clear, 1940 to the upside and get through this zone, we could end up consolidating for a bit, just like crude. So it's clearly we have to either take out 1940 or get under 1887. So in between there, we could easily have another sort of a consolidation zone or a chop zone, really.
What on a lot of these commodities
There's that box.
I'm watching for too is to see if do they form some sort of ABC, like we continue a rally up, which would be the B, and then we come down and do another pullback leg for a C.
Yeah, well, I mean, this is setting up in that way.
Mm-hmm.
So A, B, C, and a D would really do it.
Yep. Yeah, that's what I'm checking to see if we do.
And watching these levels will help us kind of figure out early on, which way it's moving. Mm-hmm. Before all the momentum indicators turn.
Mm-hmm.
All right, looking at the weekly gold. So 2100 was our main resistance basis the weekly charts. And our bracket for support on the weekly longer term support was between 1881 and 1919. And, the pullback held pretty well within that zone. Again, long as we're above 1919 basis weekly, right, for the longer term charts, I think it's on a firm place and a place where we could easily move higher. Easily moving lower would have to happen if we get through 1881. So this is the area to watch. And I would say so far it's looking fairly firm and it's holding. And I think gold is holding well. It really depends how we consolidate. If we consolidate up here, clearly it's has a clear shot to check higher levels.
No question.
Yep.
Just watching to see how it plays out, right? How's the correction going to go? Is it going to be just time? Is it going to be a little deeper in price? We don't know. We just got to watch.
So next week, really, the two key levels to watch will be this 1887 and 1940, because I think that bracket's going to give us early indication, right, which way it's tilting. So, or if it's consolidating till the next move. All right, dollar. Well, it's playing perfectly within the boundaries. I added this line last week, wanting it to hold above that if it was strong. Worst case scenario was 97 to come back and test that. And the fact that we held, at the quarter of the square, hey, the dollar's in really good shape. It's very strong. It's, kind of forming a little triangle here. So it's possible we do one more run up, and test the 90-degree level above 100. So so far it's pretty firm. I think above 97 is firm. We got all that big base that we built last few months.
Yeah, all that whole consolidation's above that entire base. So that's bullish.
Right. And I did, we got to look at the euro while we're here. Now, euro, I'm using a square 72. And, we did go down 144. And, we had this 1080 as support. And we pretty much tapped that on that a couple of weeks ago. And being that 144 down, we were looking for some support and a counter trend. We got the counter trend. Now, euro is really not done till it can at least close above, 120. So it looks like we're also, euro also looks like it's going to consolidate through here between these levels for now. The direction is still down. So just trying to see if there's a good spot to sell it again. And it's really way up here around 120. So either we're going to rally up here or just probably consolidate next week to, find a good value spot. Let's see, why did I bring that up? The 144 here is square 72. And so if you go to the dollar and instead of using the 90, if you look at the 72, dollar did the same thing. We banged up against 72 with a little bit above it, this 99 level, and sort of stalled out. And you can see how the euro went 144 and went a little bit below and spiked back up. So clearly that's a level to watch. Either we're going to consolidate around here now, because we're done, or if we take out this 99 or the 72 square, I think then we can look for another leg up. I just wanted to bring it up because I saw it the other day and I didn't, I thought I should mention that. So we kind of know what to expect.
No, that's good.
Okay. Talked about the euro. Let's go look at the weekly charts. Here's a weekly dollar. Again, 72 degrees up off the low. Of course, we pushed a little higher than normal, you'd normally expect. But that's to be expected in these times. So that's all right. The key is, if we can hold above this 98 level, which is, 72 degrees up, and looks like it's consolidating here. We've been up here 3 weeks. So it doesn't look like it's done, but it's holding, the fact that we're 3 weeks in the same spot on the weekly means there's definitely support there. And it's not weak. So we can expect it to continue to hold this level, I think. And euro, of course, weekly basis looks like there's a little bit more to go, at least to tap the lower fork that we've had here for months and months. And, to prove that it's done with the down leg, let's see if it can at least get above this 120, which is sort of the lower boundary of this box we had drawn out. And we haven't even done that. So it looks like it's either going to consolidate here or maybe even go a little lower next week. And that's all I've got. I think I'm done with my set.
Okay. Good
Throw back
review.
to cover the commodities.
Yeah, we'll start with NQ. We'll take a look at that, what happened there.
Okay, hold on one second. Let me switch.
So before we jump into the commodities, we'll take a look at the NQs and I wanted to talk about something as well. In the beginning of the show, we were talking about how, spring is coming. It is the seasons are a natural cycle, which we all experience. Every year on Earth, we experience these changes in the seasons and the growth patterns in nature. Well, that sort of phenomenon also applies to the markets. We talk a lot about cycles. I post on Twitter about the proprietary cycle work that I do. We have some hits coming up this week. This weekend here now we have the changing of the seasons. We have the vernal equinox, which is the start of spring and the end of winter. So I always try and look at the markets as we come into these different seasonal changes, because if you go back and study the patterns and the charts and everything, you'll see a lot of times you'll get changes in trend or changes in character of a market at these points in the year, these four different seasonal changes that we experience. So that's just something I want to throw out that everybody should look at. If they're doing any cycle work, you can definitely throw in the change in seasons as something to observe as you're doing your work. Well, the NQs had an interesting week. Unlike the ES, the NQs made a lower low than the February 24th low. And I think you could call this a false break low because we made a low and then sort of rocketed right out of here.
Yep. Mm-hmm.
So that sort of told us that the end of this leg, this particular leg was there, that something ended there and something started here. Well, we got, 4 strong days up. The key thing that I saw here that, we've talked about this in the past, on Friday, the low was on top of the square that we had just gotten through. That's how you clear, right? That's how you clear a level. So this cleared that level, which means we're opened up to going to this, around 14.6 level, which is the half square. If we do push the rally and keep going, into the first few days of this week and we stop here, to me, longer term, it's still bearish because if you look left, look what it's sort of bumping up against.
Mm-hmm.
The lows we had in September, October, and in July, August. So this is an important level I'm going to be watching on NQs this week. It's around that, as I said, that 14,600 level. So if we get stuck under that and turn down, I would say that, the bearish trend and the bearish sort of thesis that we're operating under in the short run is still intact and still alive. If we get above it and sit on top of that, then we're looking at, the next level up here, which is, around 15.2. And then, there's overhead there as well. But, for the bears, you don't want to see it get back up here because then now you're looking at danger territory where this thing could totally flip bullish. Where are you on the NQs, Barrie?
Well, I'm bearish. It's going to take a while for me to turn bullish on this. So we'll have to see. I think your upper square would be my limit. It would have to really settle above that half square, just running up and down. We're just doing these quick counter trends on a big down leg here. Because if you look, we're getting 2-3 day counter trends. So I look at this as being another one till it's done. So
I'm with you. I'm with you on that.
Mm-hmm.
Let's jump over to the commodities. And we'll start with the 30-year. This is a chart I've shared before on these broadcasts. This is the weekly chart for the 30-year Treasury bond futures. What you can see over time, going back to sort of late 2018, where we set this concentric circle chart, every time it gets stuck under one of these circles, you get a fast move to the downside. Mm-hmm. What we're doing here, we caught this one earlier. We pulled back up into the square. It tried to get, not the square, sorry, into the circle, tried to get back up on top of it. And now we've started selling off. The coming week, the next bar is going to start printing right here. So we're at an interesting juncture. Either we start accelerating down and get caught on this, the inside of the circle, or we start moving out and then begin doing, one of these sideways moves or, sort of chop that's characteristic of when it comes outside of the circle. So I'm going to be watching this. I'm very bearish on the bonds, just like Barrie. His review was, I'm totally in sync with it. I just wanted to show this as another sort of piece of evidence to look at that might support fast moves coming to the downside in bonds if we do catch the sort of the curve here of this circle,
which is catching.
Yes.
Mm-hmm.
Yep. I like this chart, and it's been helpful in identifying these periods where we can catch the fast moves. And this looks like we're on the verge of catching another one. And if we can take out these lows, that might get the markets excited and get this thing really moving. So be watching bonds this week for more weakness and the possibility of this sort of move. Nat Gas is going to make another appearance on the show. This is one that we've been in and out of a few times in the past year, trying to catch the setups when fast moves are on deck. And it's not quite there yet, but I wanted to bring it up to show people, because it's starting to sort of stack up the evidence that we're ready to get another shot to the upside here. The key thing that we've been seeing over the last 2-3 months is a series of higher lows in conjunction with some higher highs. We've been triangulating since this, early February high, but notice how they're stepping up the place where they're buying. And the last few times it's been right on the half square. They've tried to push back down through the half square twice, and it's getting rejected, and the buyers are stepping in. I think the next time we can get above this 509, 510 area, and sitting on top of that would be the green light for me. All clear, we're heading higher, and probably going to make higher highs than we made last fall. I like the way it's acting, even though it's erratic and it looks horrible. This is the setup that a lot of these commodities show right before they start a launching move higher or lower. They do this erratic consolidation in a triangle, and the key thing is to just try and look through the crazy up and down price action and see if there's any clues as to the direction that they're going to go. And as I said, here we're seeing evidence that they're trying to set it up for a move higher. What are your thoughts on gas? I know you've been watching this one as well.
Yeah, well, I think overall the pattern is good. We're making the lower higher lows that we normally see before break, and it looks good. I mean, it's a little bit volatile, but to say the least.
That's Nat Gas, right?
Nat Gas, but it's looking good. It's holding the pattern. It held the half square. The entire pattern is making higher lows, so it's just a matter of you can even draw a steeper trend line if you connect that last two highs together.
Mm-hmm.
So I think if that breaks, we could go. Not sure what would drive it, but it looks ready.
Interesting. We're coming out of the Nat Gas period, right? Winter's ending. Mm-hmm. We're heading into spring, and again, we don't know. I don't know the fundamental reason behind why people want to own it, but the chart's telling us that people with money are stepping in and buying. So
yeah, and it's not a cheap contract to play around with.
No, put it on your radar if it's something you're interested in, because the setup it looks to be forming and getting ready to go. I only have one. Believe it or not, I only have one other market before we jump to that market. Grains the corrections continue. As I mentioned before during Barrie's segment, it looks like B waves are forming in that sort of move. Some type of B wave, some type of consolidation after the first sharp move down off the high is going on in the grains. Same thing in gold, silver. The corrections are continuing. They've had a pullback off the highs, and now they're pushing back up in some sort of potential B wave. So we're watching there. Copper is at the top of its daily triangle, weekly triangle, monthly triangle. So it's still stuck in that triangle, waiting to see if that can break out and then settle above the triangles. So nothing to do there. And crude, Barrie covered, same pattern as gold, same pattern as silver, same pattern as wheat, same pattern as all these other commodities we've mentioned. Just a correction continuing there. But one that is set up and looks looks poised to make a fairly sharp move higher is cotton.
Mm-hmm.
Cotton was one we were on last year, catching this move out of this triangle here.
Mm-hmm.
We had a sharp pullback, and that we went to new highs. We've had another sharp pullback. It is really interesting. The thing is making these kind of moves after the same sort of pullback. See the pullback here, sharp move. Pullback here, sharp move. We've had the pullback. We've started the sharp move up. If this thing can break out, and when cotton goes, as you see, it doesn't wait. It goes.
Yeah.
You get maybe a couple inside days. If you're lucky, you'll get a pullback day. Otherwise, it just goes. So this week we're watching to see, Monday morning if we get some sort of inside day action or pullback. Ideally, would be a pullback to this half square, right, which is around 123, 124. That would be the ideal place if we pulled back and held there to take a shot. Otherwise, if I see some sort of inside day here after a full day, I may take a shot because the price target, if we do similar moves as we've done on the last two times, you're talking about like up here around 142, 142 and a half. Or let's say if you even want to just call it the full square, you're talking about a move to like 141. And we're currently sitting just under 127. It's interesting. You have to, each commodity is different and you can pick up these patterns, but this one, this type of move in this thing seems to be a fractal that repeats, and it looks like it's happening here. And the other things we've got is we've got the higher lows, the things that you want to see. You got a steepening trend line, right? The first trend line's here, the second one's here. Third one looks like we're going parabolic on the move higher. So I think cotton is setting up. I'm looking for, as I said, an inside day or some sort of pullback to get involved, but this one looks bullish. I know you were all over cotton earlier, Barrie.
And what's that value at the half square? I think that's the key level to watch for any kind of a pullback, holding above that.
Here you're talking about 123, 124 area?
Yeah, I think looks like we did a clean break above that. So any pullbacks above that, I think is fair game.
Yeah, and you can see how well cotton's been acting to the squares. We caught the high here. See how this consolidation happened near the bottom of the square. Here, you had this hesitation at the square. Same thing over here. Here we had this consolidations at the low, consolidation at the low part of the square, consolidation at the upper square, high on the upper square. So it really likes the geometry here. And I think, based upon this move, this Friday move, things may be ready to roll in cotton. So it's a light week because of across the commodity sector, we're seeing those corrections. We on last week's show, we kind of alerted everybody to it that, a lot of important numbers, 144 being the most important that I saw, was hitting in a lot of these commodity markets. So we're patient, we're waiting, letting them set up, and waiting till you see something like cotton or potentially something like natural gas setting up to really focus in on the market. What are you looking at this week specifically, Barrie?
Well, watching crude for a possible finish to the pullback or the correction. That's one. Gold, I don't think. I think it's really probably going to hold this for the week. But anyway, watching that nonetheless. And of course, the big if there's a reversal in the S&P Monday, Tuesday, watching that at these levels. Those are the key things. And of course, cotton. And I'm also watching copper along with cotton.
Right, copper's in that big triangle, but yep, if it can break and hold, that'll be a mover as well.
Right.
So we're in the season, no question. We're in the season of changes of seasons, but also a lot of activity in the market. So again, if you enjoy the show and you like the content, give us a like, give us a thumbs up, put some comments in. and have a great week, everybody. Barry, have yourself a great week.
Thanks, Ben. Good job. Nice.
All right.
Nice. I'm glad you covered the seasonality, because I think that's a key component that we tend to forget, right? We get caught up in the chart and then we forget the bigger movements. So I'm glad you covered that.
Absolutely.
All right. Have a good week.
You too. Take care.
Mm-hmm.
Bye-bye.